months or so, farmers are going to use a lot more input than they used in 2010 and 11. Therefore, the question simply is, will there be supply response to high prices in 2010 and 11 during 2012? This is the question all of us have to think about. And the next question is, because weather was not friendly in 2010 and 2011, will it turn benign in 2012? And we'll, of course, find answers to these questions too. The next one is the external environment. All of us know the second half of 2010 and the first half of 2011, and even the second half of 2011, the external economic environment has not been robust at all. In fact, it is rather weak. Those of us who've been following OECD global indicators, composite leading indicators for the world, have seen a very significant slowdown in each one of the major economies of this world. And because of economic slowdown in the last quarter of last year, that is 2011 last quarter, October, November, December, we found a sharp decline in the prices of major agriculture commodities, be it sugar, be it soybean, be it wheat, or corn. Simply because a lot of speculative capital went out of the market and there was a huge sell-off, huge profit taking. As they say, cash was king. And even now, cash is king. People don't want to invest in commodities in general and agriculture commodities in particular. So the question again is, will this external environment improve? Will there be a judicious resolution to the European sovereign debt crisis? There are apprehensions about China. Is China slowing down? I track Chinese trade data very closely month on month. There are indications that Chinese trade data suggest that there is a small slowdown. Will the slowdown continue? Will it pick up or will it worsen? We still don't know. That's the next question. We then come to inflation concerns and monetary policy and the role of speculative capital. We found the whole of 2010 and 2011, the central governments of major economies, particularly emerging economies, China and India, for instance, tightening credit regularly. I think both China and India tightened credit about 15 times in about a 20-month period, very simply because they in fact decided to compromise growth and wanted to control inflation. So inflation control became their priority, and therefore they tightened credit. The question now is, what's going to happen in 2012? Is there a possibility of easing of credit? Will they de-squeeze this credit? Is a big question. China and India also, the central banks of these two countries have now given some very incipient signals that they are willing to reverse the direction, and this credit squeeze will now start to ease. And that will have an implication for money supply and for demand. And importantly, the yuan over 2011 has actually firmed up by 4% vis-a-vis the US dollar, which simply means imports into China are going to become less expensive. That's actually a major demand factor. And the other factor is speculative capital. We found in 2010 and 2011 a huge amount of speculative capital flowing into commodity markets in general, gold and silver, of course, crude oil, base metals, and to a lesser extent in agriculture commodities. But a large part of the speculative capital in major agriculture commodities actually exited in the last quarter of 2011. So the question is, will they come back? And why should they come back? And under what conditions will speculative capital come back? I think these are questions which have to engage us. And the last one is crude oil dynamics. The very positive relationship between crude oil prices, the positive relationship between crude oil prices and agriculture commodity market prices is absolutely well established, simply because crude oil is a universal intermediate. It increases the cost of synthetic fertilizers, it increases the cost of mechanized production of agriculture commodities, increases the transportation costs. Therefore, high crude oil prices automatically translate to high agriculture commodity prices. Where is the crude oil market headed in 2012? The signals are, of course, very, very clear to all of us in the last several weeks. Those of you who've been tracking crude oil market, the signals are very clear. Will there be further deterioration in the global geopolitical uncertainties, or will it ease, or will it slow down? We still don't know. Therefore, there are questions and questions and questions to be thought over. And let's try over the next probably 7 or 8 minutes to try and find some answers to these questions. My sense, very simply, is that in 2012, suppliers producers of agriculture commodities, particularly in industrialized economies, would begin to invest more in crops. They would use more fertilizers, more pesticides, better seeds, etc. And therefore, in my opinion, 2012 is going to find a significant supply response to major agriculture commodities. Take wheat, take corn, take soybean, take sugarcane or sugar, cotton. I think 2012 is a year when production, in my view, global production of these major agriculture commodities is going to rebound. Therefore, the second question is weather, which is a major uncertainty, as all of us know, and no one has any control over weather developments. We've had 2 bad years, 2010 and 2011. And this was primarily both El Nino and followed by La Nina. The probability of a third bad year seems to be rather low. And this La Nina, which is even currently affecting South America, Brazil and Argentina, is already beginning to weaken. And therefore, there is reason to believe that the negative impact of a La Nina will be much less than what we apprehended earlier. Therefore, there is hope that the world will return to normal weather. And this is my central assumption, that the world in 2012 will return to normal weather, and that will have a significant impact on acreage and on crop yields, particularly in the context of our expectation that farmers will use increased amounts of inputs for their production. Again, my expectation, first half of 2012, the situation for agriculture commodities will be relatively tight. It will be relatively tight simply because production in the northern hemisphere is actually going to happen in the second half of the year. We are now in the first half of 2012. And therefore, in the first half of 2012, we will still continue to feel the spill-off negative effects of 2011. And therefore, I'm expecting global agriculture markets to continue to remain in a relatively tight situation in the first half of 2012. And for reasons that we saw earlier, that there will be a supply response to prices, in the second half of this year, I'm expecting a major rebound in agriculture commodities, major crops, grains and oilseeds to rebound, and therefore there will be a substantial easing of availability of major agriculture commodities in the second half of 2012. Weather vagaries, yes, all of us know about weather vagaries, but weather always played a crucial role in influencing the agriculture markets. But as I said earlier, the risks relating to weather are abating. The possibility of a return to El Nino condition, which usually follow La Nina, can of course affect production in the months ahead. But the probability, I'm told by experts, weather experts, that is much less. The next point I want to make is there will be stock build. At current prices, even in this tight, fairly tight situation in the first half, which will begin to ease as we go towards the second half, there will be stock build by processors and traders simply because they need to service the market for the months ahead. Therefore, the stocks which will be built over the next 3 or 4 months will actually help moderate a price rise, even in the event a El Nino condition happens and it starts to affect prices and production. Speculative capital. My expectation is that after the experience of the last quarter of 2011, when cash became king and speculative capital actually exited the market, it's going to take quite some time for the hedge funds and other funds to actually enter agriculture commodities. In the last 3 months, hedge funds exited the market, there was profit taking, etc., simply because of the weak global economic outlook. And there is much less risk appetite amongst speculators currently. This is likely to continue over the next several months, in my opinion. For that's the hedge funds, are more likely to stay off the market, particularly agriculture commodity markets, simply because of the expectation that there will be a rebound in production. And also a firm dollar, which all of us are expecting vis-a-vis the euro, is certainly going to help commodity prices stay moderately friendly to consumers. Crude oil outlook is something which concerns me quite deeply. The crude oil market is absolutely constructive. In my opinion, the demand and supply fundamentals for the crude oil market are absolutely tight. Non-OPEC supplies are most unlikely to grow or expand to meet growing demand for crude oil, and therefore there'll be a call on OPEC supplies. And when there is a call on OPEC supplies, I think there is a huge possibility that prices will certainly stay buoyant. And geopolitical instabilities are certainly going to impact crude oil supplies and crude oil prices. Therefore, if there is a directional change in crude oil prices, I expect that directional change to be on the upside rather than on the downside. So there is a risk to crude oil prices, and that risk can potentially translate to a price risk on the upside for agriculture commodities. And the agriculture markets will have to bear this cost burden. So in sum, I am expecting in the first half of 2012 reasonably firm prices. And these firm prices will begin to ease as we move towards the second half, simply because of an expectation of a rebound in major agriculture commodity crop production in the second half of the year. And subject to normal weather, we can expect supplies to rebound and prices to certainly ease lower, and inventories to start rebuilding amongst processors. The upside risks, as I said, are weather aberrations and crude prices. But wait a minute. We've looked at the supply side all these in the last 15 minutes. There is something called the demand side. And now, with the latest OECD composite leading indicators, which came out yesterday, probably day before, I think there is hope. It very clearly demonstrates that the global economy is showing signs of a positive change in momentum. The US macroeconomic data have been positive in the last 3 or 4 months. Data for Russia are positive in the last several months. The entire OECD economy as a whole is showing very positive change in momentum. Even positive change in momentum as far as India is concerned, particularly from the industrial production perspective. These are OECD's leading indicators, composite leading indicators. And if these leading indicators continue to run their course over the next 3 or 4 months, and if the global economy begins to buoy again, maybe slowly, but the direction is if it's clear that it's going to buoy, and we have sustained flow of positive macroeconomic data, I expect a significant increase in demand. Therefore, on the one hand, we have strong possibility or a high probability of a supply rebound in agriculture commodities in 2012. And if we have sustained flow of positive macroeconomic data over the next 4 to 5 months, then in the second half, one can also expect a strong or a reasonably good buoyancy in demand. And if we have good supply response and a good buoyancy in demand, it's more likely that agriculture markets, rather than being in a state of surplus, will actually be in a state of a tight balance. And when any agriculture market, it's axiomatic in a commodity market that when a market is in a state of tight balance, the funds will start to come in. The funds will start to come in and look for opportunities of investment either on the short side or on the long side. And therefore, if we are going to get into a tightly balanced market fundamentals of demand and supply for major agriculture commodities, particularly in the second half of the year, I think the probability of an upside risk to prices does exist. But if the market's going to stay in a clear surplus, all major agriculture commodities, including pulses, then of course the funds will stay off, they will not come. But in the event global economic growth signals turn positive, demand also rises, and the balance becomes tight, I expect then funds to start flowing into this market, and then it can buoy prices up. So this is the direction which I am looking for as far as global agriculture markets are concerned. And if there is a risk to prices to the upside, it will come with an increase in demand. If there is a risk to prices downside, it will come with extremely good supply. It will certainly follow the general trend in agriculture markets. Thank you very much.
Well, good afternoon or good morning, everyone. It's a pleasure to be invited to be part of this presentation. It's certainly an honor to be invited to the inaugural Global Pulses Conclave, and I would like to thank the organizers. And Mr. Rajiv Agarwal, I certainly also want to say thank you to Government of India for the promotion work that the government is doing to promote consumption of yellow peas. Certainly, as a Canadian supplier, we appreciate those efforts, as do the other suppliers of yellow peas around the world. So what I would like to do in my presentation is just give you a few of the issues which are relevant to Canadian pulse production. And as Mr. Brian Clancy has said, some of the material is going to be the same. I would like to start by saying that Pulse Canada does not do market forecasting. In fact, we subscribe to Stat Publishing and Brian Clancy's company to get information. What I'm going to do in my presentation is give Government of Canada, Statistics Canada numbers, and I think there's some small variations between what the Government of Canada is looking at in terms of a forecast and what Brian Clancy's numbers are. And I think it's an interesting comparison to take a look at the market from two different perspectives. This is a picture of what Canada looks like right now. This is our winter season. As Brian has already pointed out, though, it's a bit of an unusual winter in that it has been warm and we have had very little snow. In some areas of Canada, that we've had less than 20% of normal winter precipitation, which comes as snow. And as many of you know, our planting season doesn't begin until April and May, and our harvest begins in August and runs September into October. So from India's perspective, we only have one crop a year. The winter crop you see is fields covered with snow. In Canada, like many other farming regions, the weather is always very important, and our production, and Mr. Chandrasekhar spoke about it in his presentation, is really weather determined. And what I want to show in the next two slides is that we've had very unusual weather. Our weather patterns are not very predictable. If you take a look at the weather we've had in the spring of 2011, it was very wet, and as one of the reasons why our planted area of many crops was reduced was simply because farmers could not get into the field. This slide is taking a look at moisture levels for a 12-month period, and you see that, in fact, the colors are indicating we've had average precipitation, because we started out very wet in the beginning of 2011, but then it turned very dry. So on average, you can say moisture conditions were fairly normal. This slide is just reinforcing what Brian Clancy mentioned, and that is that for the last 6 months, primarily through the winter, late fall of last year and winter into 2012, conditions have been very dry. And the red color is indicating, and through most of the map you'll see that we're under 60% of what would be normal weather or normal precipitation. This doesn't mean an awful lot right now because we don't have a crop growing. I just wanted to show the slides to say that the weather conditions have been very erratic and unusual, and that's really one of the keys that you'll want to watch when you're looking at Canadian production potential. In this slide, we're looking at the area or the production of various crops in Canada, and you can see that by far and away the largest crops that Canadian farmers are growing are cereal crops, followed by canola. And the three lines at the bottom of the graph are showing where peas, lentils, and flax fit on the picture. So when we talk about the returns that farmers get from different crops, this is going to influence to some extent which crops they're growing. So you see that canola production has been increasing over the last number of years. It's because canola returns have been very good. So the challenge that we have in the pulse industry is to make sure that the returns are high enough so that farmers in Canada are encouraged to grow peas and are encouraged to grow lentils, because they do have cropping options, and our job is to make sure that we are driving as many of the costs out of the system and many of the uncertainties out of the system as we can, so that the return back to the Canadian farmer is as high as is possible. This information is similar to what Brian put forward in his presentation. After a few years of declining area seeded to peas in Canada, we're now looking to see an increase in production in 2012. Again, this is consistent with what Brian Clancy had noted in his presentation. So looking at an increase in seeded area, again, these are Stats Canada numbers, of about 27%, which would increase production of peas by about 25%. And I should also point out that it's still very early. Farmers really don't have to finalize their planting decisions until April or May. So very early in the season to be predicting what production is going to be in terms of seeded area, let alone knowing what the total volume might be. There's an awful lot of numbers on this supply and disposition table, but I've circled a few key ones. And as you see, we're looking at a 27% forecasted increase in production. But the carry-in stocks were something that Brian mentioned, and I wanted to point out as well. And that is that the forecast is for low carry-in numbers. So even though we're seeing a big increase in seeded area, because the stocks have been drawn down, that total supply, which is the number I've circled on the lowest line, the total supply of peas that's available is in fact still relatively low, and quite a bit lower than we saw in the 2008, 2009, and 2010 period. So the increase in area is half the story, but with much lower stocks on farms, the total available supply is relatively unchanged. And again, this is just looking at the demand side, and the key part that I've highlighted in blue, you see that even with that increase in area, the exportable supply is not going to be significantly different and is down from where it was just a few years ago. I think it's interesting. Clearly, India is our biggest market. It's a growing market. We have already seen record exports to India. You also see in this graph where China has grown as a destination for Canadian yellow peas. And I think this was noted last night in the opening remarks that it is of some concern and certainly of interest in India to see what China is doing in the market. And you can see these are our top 5 export destinations, and these 5 markets represent about 89% of Canadian yellow pea exports. So clearly the markets to watch in addition to India are into China. And it's interesting also to see in China what yellow peas are being used for, and primarily extracting the starch to make a type of noodle. I'll touch briefly on lentils. Brian has mentioned this as well. With high carryout stocks and with the price signals that farmers are getting, the forecast is that we will see a decline in seeded area of lentils in 2012. Of course, with a decline in seeded area, we're also going to see a decline in production. So you can, if we're taking a look at our export destinations for lentils, it's also interesting to note how our lentil exports to India have declined in recent years, perhaps in part due to the price of other pulses. relative to lentils and also related to some of the recent quality issues that we've had in Canada in the 2010 year in particular. So I went through this fairly quickly, in part because Brian Clancy had covered a lot of the information, but I just wanted to make a couple of concluding comments, and one of them is a promotion to attend the Canadian Convention in June in Montreal. Of course, the crop will have been planted, will have been in the ground for a couple of months, so in June we'll know better what the seeded area will be, and we will have gone through May and June's weather, which is really critical to the overall production of pulses. Weather is always important, but frankly, it's too early to make any prediction about whether we are in a dry period or a wet period, because everything can change very quickly. Really, the key months to be looking for weather in Canada are May, June, and July. And finally, my comment and concluding remark would be that seeding intentions can change, and so farmers in Canada will be looking at the relative return from wheat. And as many of you know, we're having some fundamental change in our wheat marketing system in Canada, which is leaving many questions out there in farmers' minds in terms of whether it's an opportunity to plant more wheat. And while many farmers keep a rotation of pulses, oilseeds, and cereals, they do have some flexibility to move these areas around. Now, I think a copy of my presentation is likely to be on the website for the Global Pulses Conclave. So I've noted a couple of websites that you can follow. One of them is the supply and disposition information, which is updated by Agriculture and Agri-Food Canada every couple of weeks. And the second site is looking at the soil moisture maps, which again are updated on a regular basis. So I will conclude my remarks and my presentation by again encouraging all of you to come to Montreal to the Canadian Convention, and that my CSIL's IPTIC colleagues would want me to also encourage you to be attending the CSIL's convention, which will be held in Dubai at the end of April. And I know that the ladies at the CSIL's booth would love to give you more information and promote that conference as well. So Secretary, I will turn the podium back to you, and again thank all of you for the opportunity to present to you today.
Good morning, and thank you to the Indian Pulse and Grain Association for inviting me to speak here today. I want to start today by showing you guys a little bit about where we're growing pulses in the United States. We've increased our production tremendously over the last 5 years. Over the course of the last several days, my friends at Myar Global were kind enough to send me on a little tour of India so I could learn a little more about the Kates and Galamandes of India and see how that takes place. So I'll show you a little bit about where our production is in the United States. The primary two regions of the United States where we're growing pulses now are in the Pacific Northwest in the yellow areas, which has always been a grower of the pulse crops. But in the green areas in the Midwest of the states of Montana and North Dakota, we've increased acreage tremendously. In Washington and Idaho, we grow primarily Pardina and regular lentils, which are more for the Spain market and the South American markets. They also grow whole green peas, some of the best quality whole green peas in the United States, as well as Kabuli chickpeas. In the Montana and North Dakota regions, and you can see in the darker shaded areas is where the primary production of the pulses in Montana and North Dakota are. We're growing whole green peas, lentils, whole yellow peas, frontier chickpeas are the primary products being grown there. This past year has been a long year. We had relatively wet seeding conditions through all of last spring. So in the winter of 2010-2011, we had record snow and moisture in North Dakota. We had below normal cold temperatures. Montana, which is now the largest pulse-producing state in the United States, had high snowpack and record moisture as well, with below normal and cold temperatures. All this leading to late seeding conditions and a lot of acres that did not get seeded. In Washington, Idaho, it was also wet, but not to the extent of the Midwest. So one of the biggest things that happened with the pulse industry in the United States this year was the prevented planted acres in North Dakota. As you can see by this map, in the red areas were the areas of North Dakota that had the highest percentage of prevented planted acres. The next highest year for prevented planted acres was in 1999, where there was 3.9 million acres not seeded in North Dakota due to wet conditions. Last year, there was 6.3 million acres in North Dakota not seeded due to wet conditions. And this is where you saw a huge drop in the pulse production in the United States last year. So last year, the total seeded pea acres dropped virtually in half from 760,000 acres down to 380,000 acres. The Midwest seeded pea acres is where the large percentage of the reduction came, with only 275,000 acres seeded in Montana and North Dakota. The Pacific Northwest seeded pea acres was slightly lower, and most of the reason it was lower had more to do with Kabuli chickpea prices being better than pea prices. The total seeded lentil acres dropped about 30% as well last year, down to 448,000 acres. For the United States, the lentil size distribution of what we're growing would grow primarily a medium green richly lentil, with the largest percentage of our acres in that area. Our small lentils, which are primarily Pardinas and Viceroy Eston style lentils, are the next one. Our red lentil acres was only 41,000 acres, and our large seeded layered type styles was only about 16,500. The total seeded chickpea acreage last year was virtually unchanged. Everybody can have a little bit different look at it, but it was virtually an unchanged acreage situation. There was prospects of higher acres, as we think they'll see more acreage in Montana and North Dakota, but without the ability to seed them last year, it basically became an unchanged situation. Looking at pea production in the United States, you can see we dropped from 640,000 metric tons to 250,000 metric tons of peas last year. The breakup of our yellows and green distribution shows that we had about 112,000 tons of green pea production last year. The yellow pea production was only about 138,000 tons. I know many of you buyers have sat and listened to our offers on yellow peas, and you think that we're crazy offering the kind of prices we're offering. But the one thing that we have in the United States is the USDA PL 480 tenders. When they come in and they'll buy split yellow peas, and they will buy this year virtually 75% of our crop in the form of split yellow peas at price levels that have kept our yellow peas from trading anywhere in the world this year. Lentil production this year dropped also. You can see it down to 224,000 tons this year. With some of the larger size chickpeas up about 7%, I think we'll see small size up about 40% this year as we put more acres into Montana and North Dakota. Yellow pea acres will increase as you'll see a switch from green to yellow acres, and you'll see North Dakota return as a growing area for yellow peas. Green pea acres will increase this year, but I put a but on it. The PNW acres, the higher quality product that we typically have, will decrease this year as we're seeing people go towards chickpeas in that region. The Montana acres will hold steady to slightly lower as we see people switch from yellow to green peas, and North Dakota will increase, but will have generally a lower quality of the 2s and 3s. Lentil acres will increase. Montana acres will be higher with more reds and more Estons being grown this year, as farmers are frustrated with their ability to market Richleys, and they're looking for different varieties to grow. And you'll see less richly grown in the United States this year. North Dakota will increase, and that's primarily just due to the better weather that they have. So that's all I have, and I thank you.
Thank you, and good afternoon, I think it is by now. My presentation is mainly focused around Desi chickpeas because I think that's one commodity in Australia where we can actually, I think, influence global markets. While production itself is not sort of huge by Canadian and certainly European standards, we do represent, I think, something like 80% of the world trade. So we do have an influence on world markets. I will touch on dun peas a little bit towards the end of the presentation. But if I can just start by making a few comments just generally in terms of the pulses, I guess, in Australia. Firstly, pulses have certainly found a position within the farmers' cropping as a substantial benefit. There's certainly very good rotation benefits being achieved by farmers, and for that reason we're going to see certainly stable production moving forward. Whether we increase production of pulses is very much linked to global prices and comparisons to feed grains and to cereal grains. Unlike some other parts of the world, in Australia we have no subsidy systems, we have no import duties, we have no export duties. So the markets are very much left to themselves, and farmers very much look at forward projections on prices and the relativities of those as to what they plant. So with that, I'll go forward. If someone can tell me which button to push to go forward. Is it just enter? Sorry, which one are we going to go for?
Enter.
Just enter, okay.
That's
Okay. Looking at, this is Desi chickpeas, as I said, looking at the Australian supply side, and I guess being a trader by nature, I'll get down to the very specifics of the supply demand on chickpeas in Australia. This year we'll carry in very little in the way of carry in. I mean, we had reduced production in 2010-11, primarily caused by weather problems. As most people know, we've been in a La Nina cycle. That has meant that our part of the world has been seeing excessive rain, extreme flooding, particularly in the northern parts of Australia where chickpeas are grown. Planted area in Australia in 2011-12 was down by about 50% over the previous season. There was a lack of suitable planting seed because of the weather problems the previous year, and a lack of grower confidence, mainly due to disease issues created by the extreme weather. They were the two major reasons